Look, the headlines are screaming about gridlock in Washington. And for an investor, all that noise can be, well, deafening. But what if I told you the data tells a completely different story? We're about to cut through the panic and show you why Wall Street often yawns when Washington freaks out, and more importantly, how you can use that to your advantage.
So let's just get right to it. The question that's probably on your mind is, with the government at a total standstill, should you be hitting the sell button? It's that knee-jerk fear, right? And it can get to even the most seasoned investors. But here is the single most important takeaway right up front. History shows that the link between political chaos and a market collapse, well, it's surprisingly weak. So let's unpack the actual data that proves it.
Okay, first, let's get a quick handle on the specifics of the current situation. Every shutdown is a little different, and the market's reaction often has to do with the unique economic and political stuff going on at the time.
Yeah, this is not just some short-term squabble. It all kicked off back on October 1st and is now dragged on long enough to become one of the longest funding gaps in U.S. history. And as of right now, there's still no clear end in sight.
So what's the big holdup? It really boils down to a pretty fundamental disagreement. The House and Senate are just completely stuck over the expiration of these enhanced ACA subsidies. Democrats are saying they won't pass a funding bill unless those are extended, while Republicans are digging in their heels, demanding spending cuts somewhere else. It's classic gridlock. And listen, this isn't just a DC problem. We're talking about 900,000 federal employees who have been furloughed, basically sent home without pay. Millions more are working but not getting a paycheck. That's a direct hit to consumer spending and confidence that can definitely ripple out across the whole country. But with that context in place, let's pivot to the crucial part for you, the investor. How have markets actually behaved during these crazy political times? This is where we separate the scary headlines from the hard data.
This quote right here really gets to the heart of it. You have to remember, the market is always trying to look around the corner. It pretty much operates on the core assumption that sooner or later a deal will get done. So it prices in a resolution, not a never-ending crisis. And hey, don't just take my word for it. Let's look at the numbers. The last 3 major shutdowns, right? The 35-day marathon in 2018-2019, the market finished positive. The 16 days back in 2013, positive. The 21 days in 1995-1996, you guessed it, positive. The pattern here is, well, it's pretty darn consistent.
And this isn't some weird thing from ancient history. I mean, look at the market today. Even with one of the longest shutdowns on record, the S&P 500 is trading near its all-time highs. That's a pretty clear signal that the market is, once again, looking right past the political drama in Washington.
Okay, but, and this is a big but, a smart investor never, ever relies only on past performance. It's absolutely crucial to look at the unique things happening this time around. We have to ask ourselves, what makes the 2025 shutdown different?
The biggest difference this time? It's the economic backdrop. See, past shutdowns usually happen when the economy was pretty robust. Today, things are a bit more fragile. So you throw in the threat of permanent layoffs and these delays in getting critical data like inflation and jobs reports, and you've got a recipe for a whole lot more uncertainty.
So what is the bottom line for your portfolio? How do you take all this analysis and turn it into smart, actionable decisions? Let's lay out a really clear framework. Here it is, 3 simple steps. Step 1, focus on the fundamentals. What are companies actually earning? What is the real data on inflation and employment telling you? That's your signal. 2, separate your politics from your portfolio. Seriously. How you feel about the gridlock shouldn't dictate your buy or sell decisions. And 3, view all this noise as an opportunity. If the market panics over some headline and sells off perfectly good companies, well, for a disciplined investor, that could be a major buying opportunity. So I'll leave you with this one question to think about for your own strategy. Based on everything we've seen in the data, is the chaos in Washington the real signal you should be trading on, or is it just noise that you should probably be tuning out? History, it gives us a pretty compelling answer.